Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. And yeah, honestly, this week was a good reminder of why I do this and why I've doubled down on it since I got laid off earlier in the year. I don't know if you've seen, if you follow gaming news, but Microsoft just announced sweeping layoffs in their Xbox games division. So 3,200 jobs that are going to be affected, 1,600 that they're laying off this week and notifying, and then 1,600 more that they're going to be doing in the rest of the year. So it's like that's 1,600 people job cut is still looming for anyone that's left. And I don't know, it's just a terrible, sad state in the games industry. Honestly, like we've been in this kind of cycle for the last few years, really, since kind of like 2022, 2023, I'd say. I don't know. I might be pessimistic, but like I just don't know how the North American games industry is going to get itself out of it. Like scopes, budgets, schedules are just kind of so out of whack, and I think there's going to be a big correction in salaries and number of people, like potentially stuff going in the Hollywood route as far as like more contracting and project-based stuff. And we're kind of seeing how that's playing out too on their end, especially on the VFX side. Not great. So honestly, I'm not even at these Xbox studios, but I just feel for those people, and I'm just incredibly still on edge about it all too. Like I have my new job and it's been going fine so far, but honestly, I just feel kind of burnt on the industry as a whole. Like I still love my job, I love what I do, and I love my current team, but like yeah, just the state of the industry is kind of just hard to ignore. And really that's a large part of why I'm doing what I'm doing to retire early from the games industry, right? I'm investing 100% of my income into growth and high yield ETFs. And week by week, I'm replacing my salary at an accelerated pace with dividend income. And really to retire early, safeguard in case a layoff happens again. Saw how I navigated the layoff earlier in the year and how that worked out well, given the income that I had, coupled with unemployment. But if all goes well, I should hopefully be able to retire in 4 years from now at 40 years old. Originally, even with my old growth strategy and 30% of my paycheck in investing, I was aiming for 45. So trying to front load that and get that to 40, right? Today, it's been 58 weeks since I started the strategy, and I'll go into all the details of how I outperformed the S&P 500 this week by almost 2 times with my 1.89% total return gain. I'll check in with my margin health, all my dividends received, go over my portfolio updates, and finish with the finance channel of the week, which is a new channel that I discovered this week, Robbie Money. And that said, you'll get radical transparency on this channel and whether the market is up or down. And if you appreciate all that transparency, give a like and subscribe. And as usual, just a quick disclaimer. This video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. Make sure you have a good read of this full disclaimer. As far as my weekly flow chart, you can kind of see it here and pause. I won't go over it because you can kind of check out a video here at the top right for a full deep dive. But this is a strategy that I use to kind of stay fully invested, invest 100% of my paycheck, and live out of my Robinhood brokerage account. And let's just get started. So if we pop over to Robinhood, we can see that ended on a nice green day on Friday, was up 0.38% or $884, ended at a 233.8 portfolio value. And if we check on the week, was up 1.89%, like I mentioned, or 4.3K. If we open up VOO to just kind of compare to that, just to see where we're at. So VOO in that same time period was up 0.73%. So that's how I more than doubled it, right? So pretty awesome. So this includes dividends received, right? On the month, sitting at 6.02% gain or 13.2K. On 3 months, sitting at a 25.96% gain or 48.1K. Year to date, up 25.75% or 47.8K. If we go to all, and yeah, pretty much a year since I transferred to Robinhood, actually. So a little past a year now. Awesome. But all, we're sitting at 54.9K or 30.75% gain, which is awesome. So yeah, that's, as you can see, that's all my positions, right? All my live portfolio, nothing's hidden here. If we pop over to my spreadsheet, we can kind of see a deeper dive on everything. So if we add up all my positions together, I'm sitting at a gross value of 422.2K, which is awesome. Margin used, I'm sitting at 189K, and which gives me a net asset value of 233.1K. It's a bit similar to Robinhood. It's a little bit different there just because that includes the after hours, which I don't have on my sheet. I don't even know if I'm able to get that number, but I'm fine with kind of having the snapshot from the end of the day. If we check on the total return columns and unrealized gains, we can kind of see, so total profit for everything for the portfolio. That includes realized gains and losses, dividends, and all that against the margin value. I'm sitting at over 100K, 111.7K gains, or a 47.91% gain, which is amazing. So that's all in total returns. If we go on the unrealized gain side, I'm sitting at 18.9K or 8.12% gain. So this is basically unrealized gains plus any realized gains, right? So green on both sides of the coin, which is nice to see. We're slowly clawing back out of the red for some positions, or still in the red here. IALT clawed its way back out of the red. YMAX kind of getting greener and greener, which is kind of cool to see. ULTY's just still slightly in the red. We'll see if it can kind of claw its way back out there, but obviously some big unrealized gains here, and just because they're fairly big NAV eroders because of their higher yields, right? But as I say, I'm kind of fine just kind of collecting their income and reinvesting into other parts of the portfolio that are safer yielders. And again, these are relatively small positions in the portfolio, right? Like this makes up just under 6.5% of my portfolio. So if these erodes, not the biggest of deals, and mostly because its yields are fairly high, right? And if I were to sell those and reinvest those into other parts, there's not really others that can match it. Chippy could come the closest, but that's about it. Blocks or BTCI, but I feel like those that can be mixed, right? Can erode quite a bit too, with Bitcoin being on a downtrend right now. So I'm keeping those there and then just kind of reinvesting its dividends, really. And then KGLD and KCOP slowly kind of climbing out of the red there. I'm still buying the dip on these as they stay in the red. I think can't go wrong with kind of metals there. Gold is kind of just more of like a little bit of a hedge, even though it's more volatile these days. And KCOP is kind of like a play on AI, just because you have a lot of copper needs with the data centers and everything. So that's why I'm invested in that. Some days I'm thinking like, maybe I can just kind of, if I want to go for the AI play, just kind of take that and throw that into something else that's more related, Chippy or something like that. But still keeping it for now, just as a nice little diversifier there. GIAX slightly in the red here, but climbing out. And I'm still buying the dip on that. So that's a nice 24% yielder, as I mentioned. Blocks. I'm kind of favoring blocks over BTCI these days as far as investments if I'm buying crypto. Just because like it should have, given its put credit spreads, like more uncapped gains compared to BTCI, which is kind of doing covered calls. So I'm still debating too, still thinking about like whether BTCI, I sell that and just go into blocks, but I just want to see how blocks performs a bit better still over the long term. So keeping an eye on that. But as far as crypto in this portfolio, sitting at just under 5% at 4.17%. So I could still invest a little bit into this if I want to get that to kind of like a 5% target allocation that I give myself for crypto in general. And that's where stuff is sitting. As far as how that's split between growth and high yield income, I'm sitting at 203.5K in growth or 48% and 218.6K or 51% for the high yield income side. So like I've mentioned, I've been really focusing on the high yield income more, right? And really in light since the layoff that happened earlier in the year, right? I went from doing 60% high yield and 40% growth previously, and then now I'm doing 90% high yield and 10% growth, just because I just want to get my salary replaced as quick as possible and just try to hit my early retirement goals quickly. As far as my margin health, you can kind of see there. So gross portfolio value, margin used, net portfolio value, that's all the same. The extra number that you get here is a margin maintenance number, 105.5K. And you basically get that by taking your blended margin maintenance ratio, which is 25% across the board for me, and apply that to your gross portfolio value. And that's how you get this number. So the difference between this number and your net portfolio value is your margin buffer, right? So 127.6K, this keeps growing. And this is how far away I am from margin call, right? Robinhood, they kind of show this value, the 54.73%. That's your margin buffer on your net portfolio value. But personally, as I say every week, like I'm not a big fan of this number, just because like on Robinhood, this kind of makes you feel safer than you actually are, right? Like it doesn't really take into account the margin amplification. And the amplification is really this number here, right? The 1.81 multiple. So really what happens is that this is all the money that's in the market, right? The 422.2K. And really, if that gross asset value drops by 30.23% for me, so the equivalent of 127.6K, that's the equivalent of a 54.73% drop on the net portfolio value, right? So that's why I kind of like keeping into account this gross portfolio value more, just because that's really what's swinging in the market, right? So right now, just a little above 30%, which is cool. And then my equity is sitting at 55.23%, so kind of coming up nicely with the upswing we had this week. My buying power is sitting at 90.2K, so you get that by doing your margin total minus your margin used. And if you take half that amount, that's your cash available for withdrawal. So 45.1K. And that's where we're sitting. I'm keeping this buffer like high, as I mentioned. I could invest this if I wanted, this whole 90.2K, or even withdraw this cash at 45.1K. But I just want to keep this buffer high, stay very clear from a margin call. That's why I monitor this every week. And like I said, it's a risky strategy, right? And that's why I got to keep a close eye on it, and because I already have a lot of leverage, but I want to keep my buffer high and my equity high as I do it. So trying to de-risk as much as I can within a very risky strategy, right? As far as my monthly income, I'm sitting at 5.6K a month, so $5,628. So that's 67.5K a year, which is awesome. A weekly, it's $1,298, and daily, I'm making $185. So that's roughly a 30.89% distribution yield, right? And that you kind of get that by basically taking this and dividing it by the high yield income assets that I have in the portfolio. So 51% of the portfolio or whatnot, right? Just because I like seeing exactly how much that portion of the portfolio is yielding. If you go off the full portfolio value, including the growth side of things, like my yield is sitting closer to 16.55%, which feels more reasonable, right? But the high yield side is definitely yielding quite a bit when you look at it. So kind of buoyed by kind of things like YMAX, ULTY, Chippy, blocks, BTCI, right? And GIX. But all the rest is kind of like more than half of it is kind of more safer anchor funds that are in the 10 to 20% yield space. And again, like this is not free money, right? So I'm taking out 189K in margin. I'm paying a 4.5% interest on this, right? So I wish my mortgage was this low, honestly. I'm at 5.95%. So that costs me $705 a month that I'm paying in interest. And that money basically just goes to the margin balance, right? So when that comes in, you technically don't have to pay. It's not like a HELOC or a credit card thing where you have to like pay interest and principal. This is just an interest only loan, and it just gets added to the margin balance. You don't technically have to pay it. Like if I wanted, I could just let it go. But the key thing is that for all this leverage that I'm taking out, and how this is enabling me to invest 100% of my income, I'm generating a bunch of income with that, right? So I'm generating 5.6K a month. So I'm spending $705 a month to carry this margin balance, but then I'm making 5.6K a month with it. So that's a $4,923 positive margin spread, or basically a 26.39% yield after the interest is factored out. So pretty amazing spread overall, positive spread. It's not too dissimilar to like how a bank might handle things, right? Like if you deposit your money into a savings account in a crappy account, like say Bank of America, right? They're paying you 0.02% or whatever dumb rate that they have. They're taking that money and they're loaning it out to other people, right? You might not know this, but like then they're making an interest spread on that, right? Because those people are paying them interest for that loan, and then they're giving you a very little amount of that interest, right? So I'm kind of acting like my own bank in a way, but I'm pocketing a lot of that interest, and quite a bit of interest when you look at it, right? So yeah, that's why I love this strategy. Honestly, love being my own bank and kind of running my whole account like a bank and running all my finances through it and investing my full paycheck. So that's where all the numbers are sitting on the spreadsheet. And then yeah, as a side note, now my salary, so my normal salary is 175K a year. With dividends, that actually pushes it up to 242.5K. If you factor in my 7% annual bonus, I want to put this in here actually, percent. My salary sits at closer to 187.2K, but then with the dividends, that's actually 254.7K. So definitely climbing this more week by week, which is awesome to see. Excited to kind of hit the 300K milestone for this. I'm just gonna keep an eye on that. And really my hourly salary is sitting at $2.35 an hour. So well above the Washington's minimum wage, which is awesome. Now, if we go to Snowball and kind of check how things are going there, we can kind of see how stuff is broken down with the different categories I have, right? So I have stuff broken down a little bit more granularly here just to kind of see how the different parts of the portfolio are doing. So the ultra yielders, so anything that yields 20 to 30% plus, so that includes YMAX, ULTY, GIX, Chippy, BTCI, blocks. You can kind of see how it's doing. Really, everything's being carried by Chippy here. But yeah, it's still very in the green, surprisingly, even with a lot of kind of NAV eroders in there. That's sitting at 14.8K gain or 12.53%. So a lot of that is mostly on the dividends received, right? But definitely negative capital gains and realized P&L. This is sitting a little above the target allocation I want. I want this eventually to be 17%. And gradually this will go down as I invest into other parts of the portfolio. The anchors here, targeting at 30% allocation. Right now it's 26, so this will gradually grow there. But sitting at a 14.3K gain or 13.17%. So this is all my anchors, right? Everything's in the green except for KCOP. So you can kind of see how these all hold their yield and their NAV quite nicely, right? So this is great to see. And really all of that is kind of like really carried by XPAY, which has been holding up nicely. I have XPAY. People ask me about XPAY a lot. We were talking about it on the Discord just earlier, actually. Someone was asking the question, and I was just kind of saying how I do like XPAY. So it is a 20% yielder, right? So it's a managed payout. And in a way, it's almost kind of like controlled NAV erosion, right? So let's say like the S&P returns 15% that year, and you get 20%. So you'd be down 5% technically. So you kind of know what to expect, which is nice. But the thing is that I like trying to bite on dips here, so you can kind of see there. And really see that it's one of my strongest anchors, really, and I really like buying it. So if you're able to buy it on dips like I have both capital gains and total profit, so I think that helps really offset the NAV erosion I might have. So I honestly love it as a anchor fund for my high yielders here. And it's indexed to the S&P, which is nice. But that is also why, because I have so much in this, that I started a position in BCAP, which has a similar yield, has a little bit better returns, and so as a diversifier, right? It kind of gets its income and its capital from different sectors there, not just the S&P. But XPay is a great one. And then, by the way, if you ever want to join the Discord, it's now private. And you can join that by either joining the YouTube membership or the Patreon membership for $3 a month. So lots of great back and forth with people, and people posting their portfolios, so you can learn from them. I'm not about kind of gating people to what they can talk about and what strategies they can kind of show what they want, and really people can kind of learn from each other. You're not just learning from me, you're learning from others, and can ask questions and get different viewpoints on different topics, right? And that should kind of help you navigate what you want to do exactly, because everyone's situation is different. So great little community of people that I love that we're fostering. And then if we pop over to the dividends here, we can kind of really see the growth year by year, right? It's just growing month by month, exceeding what I made the previous year. I think that should kind of continue on. I think it might be harder to hit in August here, but we'll see, especially in these later months as well. But I can kind of really see the strategy in action here, and kind of the year over year growth of the dividends. This month too, we're sitting at 2.4K that we've gained in July, but I think we're definitely trending to kind of beat the previous July, right? 4.4K, we'll definitely be beating that. And then if we pop over to the growth side of things, compare to the S&P this week, so we can see that I beat it. Take Snowball's numbers with a grain of salt here. The percentages are pretty different from Robinhood, but the general trend, you can kind of see how stuff worked, right? So kind of outperformed on the green days, underperformed on the red days here, and again, you're seeing the margin amplification at play here, right? And the risk of the strategy. But if you have like successive green days like we had in the last couple of days, that really helps push things up, and that's kind of what happened here, and that's why I kind of more than doubled the S&P's performance this week. So you can kind of see that. But really, if we check on the month, beating it, on the 3 months, beating it nicely as well. On the 6 months, beating it nicely as well. Year to date, beating it as well. So just well ahead of the S&P with total returns, really. So capital gains, realized P&L, dividends received. So sitting at 31K of dividends received so far at the halfway mark of the year. So definitely trending towards beating the 52K that we made in income last year. As far as the heat map, can kind of check that there. And again, as a quick reminder, normally this view shows up like this, but personally I like seeing the heat map. It's a lot more visual and a lot nicer for YouTube for sure. You can kind of see across the board, it's like a pretty green week. Ahead of the pack are Chippy, VGT, CLSE, even Bitcoin over here. It's SEHD just above zero here. XPAY just about matched VU, just lying in by 0.1%. TDAQ actually outperformed its benchmark. QQQ is awesome to see. PMO did better than the S&P, going on momentum over there. ORR had a rare green week from the last few months. MLPI slightly in the green as well too, with kind of like the war stuff popping off again. KCOP and KGLD. KCOP up, KGLD down. Google down a little bit here, and DRAM up 4%, quite a bit. So just green across the board, which is nice to see, and especially after the last couple of red weeks, right? We check on the month, still fairly green. 3 months, a bit mixed, right? Year to date, still mostly in the green. And then KCOP, blocks, KGLD, BTCI, GIX, just all in the red here. So these are kind of good ones to target potentially for buys, right? Because they're so in the red. This week, for example, I still bought a little bit into SPMO, even though how green it is, just because, I've just been going very heavy into IALT and ORR. So just wanted to kind of go into the more index plays I hadn't touched in a little bit there. But that's how the heat map's looking this week. Always love checking this and checking against the find a dip tool too, to kind of figure out what I'll be investing on this week. So I've been using this a lot more lately. Checking the SMAs. And again, if you're interested in Snowball, you can see just as yourself that I use this every week. I got my registration link below, and you can also check out my portfolio for free. So you get a bit of a discount and I think an extended free trial, and then I get a bit of a kickback there. But that's Snowball. And then if we check on the dividend calendar, how we did this week. So it was a big week. Had $73 come in on Tuesday from Block. So $49 at 35% and $24 at 23% from GIX. And then on Thursday, had a big day, 1.58K that came in. So $404 from Chippy at 40.98%, $80 from KGLD at 15%, $176 from ULTY at 61%, big $806 from XPAY from its monthly pay at 20%, and $110 from YMAX at 46%. So great week for dividends. Pretty much averaging like at least 1,000 every week, which is awesome. So it really helps offset any bills that might come this week. This week was actually a pretty light week for bills, as we saw, right? Really only just had like $100 of bills this week that I had to pay. So the dividends more than covered that, which is always nice. So that's why you saw the cash bill for withdrawal grow so much. And as far as the rest of the month, looking like we're estimated to maybe hit 5.7K a month, so which is awesome. So a little bit less than last month, but we'll see. Maybe with the investments that we can kind of help push that up a little bit more. And that's the dividends. As far as kind of like the yield on cost, again, kind of the usual suspects, right? That's why I mentioned like ULTY and YMAX can kind of really see the erosion at play here, both in yield and in NAV. But I'm still keeping it just because like the 61% yield and this 46% yield still nice because they're harvesting that from the volatility, right? But again, I'm taking those dividends and reinvesting them into these safer yielders here. And you really see like all the center part, right? Like these, despite the ebbs and flows in the market, the dividend yields and the NAVs hold up pretty well. So that's why I'm really focusing on this center portion of the portfolio, right? And really building up the anchors for these. So that's it. You can kind of see that there. As far as portfolio thoughts this week, let's go back to the sheet. So I was running some numbers this week. I wanted to test out to see exactly if, depending on the dividend reinvestment, how much that would affect the portfolio value, right? So I basically did two scenarios. I did roughly the extra monthly dividends I was doing last month, where I was doing 50% of the weekly dividend. So that nets out to about $1,800 extra a month that I'd be reinvesting. So as I kind of plotted out here, you can kind of see that like, yeah, the cash flow for withdrawal dips a little bit, but then eventually kind of recovers after like several months. And then kind of just keeps growing just because like the average monthly dividends kind of catches up, right? And kind of helps offset things. But I was thinking, I was like, okay, so what would it be if I went back to investing 100% of only the weekly dividends, right? So anything that's like Chippy, ULTY, YMAX, Blocks, GIX, those get all reinvested. And I was pleasantly surprised by the difference there. So you kind of see that like for sure, cash available for withdrawal does erode a little bit, right? But for a similar amount of time, actually. So for several months as well, but then eventually starts picking up, right? Not just because like you're introducing a lot more cash flow and more monthly dividends that get added to the average monthly. And then that kind of helps offset things. So like really, if we kind of go apples to apples when we reach like 40 years old, roughly based on the projections. So with kind of 50% of the dividends reinvested, and even let's kind of go with the old one here. So with 50% of the dividends reinvested, would potentially I'd be just under 1.1 million at 40, or 730K on net equity, and would have like 367K of margin debt and 66% equity here, and then would be at just under 12,000 of average monthly dividends. So pretty nice. This would fully replace my net salary at this point, but not quite my gross. And then if we check on doing 50% or 100% of the weekly dividends, so 3.6K roughly, would be at just under 1.2 million on the gross asset value, 756. So more on the net asset value as well. Quite a bit more margin, right? Like a little less than 100K more in margin debt. The equity only dipped like 3%, so not bad considering. So taking a little like 3% equity risk to kind of make an extra $1,000 here in average monthly dividends, which is great. And cashable for withdrawal, definitely different, right? Because of that. But considering that like the previous strategy would have brought me to, so this is without weekly dividends reinvested at all, 1 million by 40, gross value 700K, and net equity. So you can kind of really see the progression there, right? 70% equity there at that point, and the most cash available for withdrawal that way. But I think I'm willing to take that extra little bit of risk to do that. So that's what's kind of informing me toward this month to really, and probably going forward, at least to just be fully reinvesting my full weekly dividends. So kind of see that here in my trade alerts where I did that, right? So I took the rest of the dividends from last week and invested that on Monday. And then as stuff dipped in the middle of the week, I did a big TDAQ buy with this week's weekly dividend, so $691. So yeah, on the Discord, I show all my buys, all my trade alerts, right? So you get an early heads up on that ahead of the videos if you're interested, as part of the YouTube or Patreon membership for $3 a month. So check it out if you're interested. But that's the big changes in the portfolio this week. As far as the finance video of the week, so as I mentioned, it is Robbie Money. So this is a new channel that I discovered through actually a recommendation of another channel, Miller Momentum, that JG3 on our Discord had recommended. And then Miller Momentum actually mentioned Robbie. And then I kind of started watching his videos. And honestly, I just kind of quickly ended up watching several of his videos over the last couple of days. And he definitely has a lot of good stuff. He really focuses on wealth building with ETFs instead of single stocks. I think he kind of puts it succinctly in his description here. And he was a former CFA, so that's kind of interesting given his experience. But he has a very strong tilt towards momentum investing, and he shares his Snowball portfolio as well too. So you can kind of see the full breakdown there. So he's big into momentum ETFs. So he's into SPMO like I am, but then he also supplements it by XMMO and then XSMO. So it was interesting to hear him talk about all that. And definitely has me considering whether I potentially maybe do more momentum investing. I definitely want to research it a bit more. I think the thing that makes me a bit more nervous for XSMO or XMMO is that like, I look at all those companies and I don't recognize a lot of them. Like at least SPMO, like I recognize a good chunk of them. So that's the only thing that kind of makes me nervous. Like I get the idea behind them, the momentum, but definitely just cool to learn about that stuff and learn even more about momentum investing. Like I had like some good cursory knowledge through investing on SPMO, but he has definitely some deeper knowledge there. So definitely worth checking out if you haven't. Great channel. And then also great clean thumbnails. I love how clean his thumbnails are with the text as well. So definitely check it out. That said, if you appreciate the transparency and want to support the channel, definitely give it a like and subscribe and hit the bell notification if you want to be notified by future videos. And as always, best way to support the channel, check out the description below for all my free and paid links. And I'll catch you in the next video. Peace. Have a great rest of the weekend.